Very well, very well. So, welcome everyone. Thank you for joining again today. I'm Giuseppe Basile, also known as the FIPS Talker, and I'll be your host today. Thanks for joining in. We have Jake, Peter, Tessie, Joe, Adinda, Kerry, Carlos, who's logged twice. Probably didn't want to miss this. Thanks for joining in, Carlos. Bektan, Vika, Lee. And many more I cannot see on the chat, very probably. So thanks a lot, Peter. And as you know, this show is the FX3 Tokyo Open Live Room. This is a daily show that features real trading at the very heart of the Asian session. We start every day from Sunday to Thursday at 8 p.m. EST. For 1 hour, and it's a lot of fun, good analysis, answering your questions, as well as reviewing the charts I trade and the markets I trade, along with your markets as well. In the last few days, we've been focusing on the SP 500 as well, and its relation with Japanese yen. Everything appears to be risk-off, so it is my belief that once this US dollar Japanese yen rally has ended, I believe the market, the SP 500, so the stock index, the stock market, the index will actually follow suit as well. Good night, all. Good night, FX Ambassador, Jax. I see a few other coming in. We have Lee, Rigul, Vika. Thanks for joining in. And a good day to everyone. We have different times, different time zones here. And I hope I'm not going to quit early again. Yesterday I was very much into it. I probably kept talking for 10 more minutes before realizing that there was a technical issue with YouTube. So I think we solved everything and we are ready to go. So welcome. A little disclaimer here. As you know, I take risk very, very seriously when it comes to trading. So trading forex and its derivatives like futures, options, and CFDs, just to name a few, and other instruments with retail of exchange transactions involve substantial risk of loss, and it's not suitable to all investors. By the way, also instruments that involve exchange transaction at the exchange involve substantial risk. You may lose all of your more of your initial investment. Actually, you can get into debt because leveraging will for you as well as against you. It magnifies gains as well as losses, and past performance is not necessarily indicative for future results. Now, we also suggest you review the FX3 risk disclosure on the website as well. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. All the material I'm going to provide is for educational purposes. I, Giuseppe Basile, FIPS Talker Consulting Incorporated, FX3 will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. So thanks everyone again. As you know, I'm one of the contributor, gladly contributing to FX3. They also have a program. It's called the FIPS Talker Methods Coaching Program. It's a complete method to successful trading where I tackled the mechanics of trading as well as developing of trading systems using the FIPS Talker methods concepts, as well as then developing consistency, profitability and consistency. So have a look at that. Now, usually we have a little introduction here. The tools I use, I use the intraday system, FIPS Talker intraday system, and I use the analysis I do it on TradeStation, as well as I do some trading on Pepperstone as well, on which I'm developing the console. I'm going to introduce next next Monday at the New York FS Trade. New York, of course, Traders Expo, and I'm going to represent FS Trade there. So thanks a lot for joining in. Of course, you're here to speak about, not hearing me speak about this stuff, but you're here because we want to have a chats. And just very quickly, hello everyone, thanks for joining in today. And let's dive into our charts here and see they are buried below a lot of stuff here. So let me bring them up and here we go. All right, so thanks again for joining in. I see Todd there as well, Jax, Joe, and welcome in. So good morning everyone. Good call on New Zealand dollar, US dollar. Well, I'm not sure it's related to me because I was looking for a retest of 50% level. Still going. Did you get on it? Okay, that's Todd and Jax having a discussion there. High hold, nice, nasty pullback though. Yeah, just had to be patient. That's very, very good observation. That we always have to be patient, and now patiently, let's go and see what has happened in this market here. And the euro, it's on its way for a correction. The extension failed. There was no way this market could actually held that level. And now there are two levels we're going to look at. One level is going to be a measured move here, the 110.67, and the other one is going to be a 50% from lows here. Okay, these are the only two levels I'm interested in looking at. There's nothing more that I want to actually spend some unit of risk to test. I'm not going to test any other levels here. Now, what is interesting is that when we put these two markets one aside the other, and when I mentioned the two markets here, I mentioned the euro dollar on one side, and this is the daily time frame, and the US dollar Japanese, and you will remember that we mentioned that this market needs a correction. Question from Jax: are you bearish on the EU dollar? Not, I'm not. This is a correction into a long. That's the way the market works. It is pushed to the next level where there is participation. So I'm totally not bearish about the euro dollar. I believe the euro dollar is going to go higher. The point is that we need to find a level where this market is going to reverse and continue higher. Okay, Jax. So don't tweet around that I'm bearish the euro dollar because I'm not. And I'm actually bearish a lot the US dollar Japanese yen. And indeed, in this market, and this market will actually reverse together once the US dollar Japanese yen hits its resistance level. The euro dollar will actually hit its support level. Okay, and there is very little room for further movements in the euro dollar if the US dollar Japanese yen reverses. So, what's the most immediate level for the US dollar Japanese yen? Again, it's that 116.36. Anyone looking at the level as well? Give me a yes. FX Ambassador is saying that all the pairs need to pull back. Fair assessment. All the pairs, everything needs to pull back, and that pullback can be very, very deep sometimes. That's the beauty of it, because it gives an opportunity to get better prices. And if we, one of the biggest problem, traders who have no experience or little experience is that they actually that one of the emotion in play is the is greed, or there's also the fear of losing an opportunity. And what happens is that there have been a lot of people who have been buying around highs here, either because they were adding to position they had to try to bring them higher, or they actually thought this market could just continue higher, so open position there, and that happens at the very often happens at the highs or at near the reversal, and that's where you get that effect of people now that are underwater, and as soon as this market will reach the next level of support, very close to the level, most of these people will actually exit their long at the very wrong moment, and that's called the bandwagon theory. So if you don't know the bandwagon theory, you should really study it, and you should go on my web page on FS Street, my page, and you'll find the bandwagon theory illustrated, a webinar, an open webinar that you should really review. Jax is asking that you like long euro from here? No, I don't like long euro from here, Jax. If this market moves long here, it's going to be for a brief reaction, and this would be a counter trend move if we look at the daily market, the daily time frame, because this daily time frame is suggesting a correction into 110.76 or 109.60, and I will not get involved in the euro long until I get some sort of confirmation at this level. So can the euro move higher, slightly higher from here, let's say into back 113? Yes, it can, but then there would be a short opportunity for me. So I won't buy long here, no way, because this level can be a level where the market can reverse briefly for a little move, or it can continue lower. So it doesn't give me any edge, Jack. So I'm not bearish this market. I'm bullish this market, but this is a correction into the next level long. Okay, so that's where we are. Hi, Beckton, welcome. Again, I see here a growing list. Beckton, Todd, Roland, Peter, Jake. There is Desi, and I want to thank Desi for spending our time with us and organizing the everyday this show. It takes time and patience. Thanks, Desi, for being there for us. Joe, Adinda, Carlos, Vika, Lee, Rigul, and Kerry. Hi, Kerry. Hope everything is good. So, US dollar, Japanese yen needs to come back to 110 and EU to 108. Yeah, that's possible. 110. I think it's a little lower than that. The maximum projection I have for the US dollar Japanese yen, yeah, would be around that level, 110. The point is, this market could stop at 116. Sorry, 110. I'm not sure. Sorry. Let me go back here. Let me roll back here. I'm not sure we're gonna get to 110 before we get to 116. This could happen. This would be a double bottom before before the market can get into that 116 or even 119. The point is, we don't know whether that is going to happen. Saying it needs to come back, it must. It's kind of an assumption. It's kind of us trying to put our will on the market, and we know that the market often does not agree when we try to do this. So, FX Ambassador, I think we should always keep in mind a number of scenarios. One scenario is that, yes, this market comes lower, puts a double bottom, and then continues higher. Another scenario is that it just continues higher. It actually expands all its energy, and then, at 116 or even higher, 119, we could actually see this market starting a reversal. And I believe that when that starts, the SP 500 as well is going to start moving lower. That's my belief. It's pure fantasy. It's not something that I know for sure. It's a conviction, and if the market is going to give me a possibility to entry with low risk, because that's the most important thing. I can have all the conviction in the world, I can have all the opinions in the world, and you can have all the opinions in the world, but what is important is that at the end of the day is that that trade makes sense, and that trade comes especially with a small risk. It's all about risk management. If you think about it, right? If you manage risk properly and you're wrong, you're stopped out, you lose a small percentage of your account. And if you have an edge, if you have a method that works instantly, you're not worried. You know that the next day, the next coming few trades will be as successful as a sex. But if you don't manage risk and you lose, let's say, 5 times your initial unit of risk because of psychological losses, and I'm not necessarily pointing to anyone here, I'm just hypothetically taking the opportunity to discuss this point, then it's possible that we play this business in the wrong way. So I see there is Coco's coming in as well. Hi, Carrie, Pankai, hello, welcome in. And for some reason, I always see more people writing than the people that I see on the list of the chat. And Todd is commenting. I agree on that. Long-term charts are leaning back towards a bull move on US dollar Japanese yen. Yes, very, very long term charts though. US dollar Japanese Todd actually on the US dollar Japanese yen, and I'm not even completely sure about it. I think the bulk of the US dollar Japanese yen trade here is going to be probably a trade into 170, and that's if I get there, any level this market is going to offer me, even 116 or 119. There is plenty to be happy in that kind of move. That kind of move could bring in 30 to 50 units of risk and gain. So we're talking about something substantial, and including risk-free management. So we're talking about something very, very substantial if you are able to get a small risk of 10 pips or 20 pips. And that's what I'm looking forward in that market. And I mentioned the SP 500 here, and you will bear with me if these days I'm going to put into the picture the SP 500 frequently. But what do you see there? Don't you see a parallel? Look at that with this between the SP 500 and the US dollar. Last 2 days, two moves higher here, and so these two markets actually are in sync here, and I believe that as the US Japanese yen has already shown that the weekly are not willing to support this market, I fear that the same is going to happen for the SP 500. So I think that when we will find the top in the US Japanese yen, we'll find a temporary top in the SP 500 as well, and that could be an opportunity to short or exit longs in if you are invested in funds. And this is my opinion, of course. I don't know what's going to happen in the future, and I give it to you to take it with a grain of salt. But that's what I see here. All right. Any questions in relation to other markets here? I'm going to review the my beloved US dollar Canadian dollar here, which is actually correcting into the previous 50% here, which is a level that might offer renewed support. Some people say, find any kind of reason to believe that this market cannot move higher. But remember that when this market has been in similar moves, it took a lot of days and weeks before he could find that strength and continuation higher as well. So this could happen with this market as well, and I'll be very, very patient. I have 2 positions at the moment. Yesterday I took a new free risk positions that was stopped in the last hour when we saw the move lower here. Then still have 2 positions to stop below the lows. So we'll keep carrying those 2 positions as we as we continue. And when I look at those 2 risk-free position, one has a potential for 19 unit of risk, and the other one has potential for 30 unit of risk. So only these 2 tiny positions here. If should the market get to targets in few months, there are going to be very interesting in terms of reward to risk. So we will see what happens then. That's just for an update. So I agree on that. What are your key levels for euro dollar? So we look at the euro dollar before. Let me put it up again, and let's have another look at it. There are 2 levels that I've indicated here. One, it's a 110. 70, 80 level there. That's the most immediate level, and the next is a 50% level. It's the 109.60. So these are the levels that I'm going to look at in this market, and both of these levels might offer free risk trades. And as we don't know where this market is going to reverse, any opportunity given in these markets is going to be an opportunity to short. Now, if this market actually moves higher, pushed by the smaller time frames, as it appears it's happening at the moment, whenever it gets into previous size here, that becomes a good opportunity to short this market into one of these 2 levels. Okay, so last week we traded this market higher from these levels here. And this week, if this market moves higher, you're going to trade it short into the next area of support. Okay, this market is not going to shoot up from here. I don't see that, not for the long term. So it means that he needs to come back and find that participation from large algo, smart money, and professionals that it's not showing up yet. Todd, does this answer your questions there? I'll take some notes here. And so we spoke about, so far we actually reviewed the euro dollar, and the we also reviewed the US dollar Japanese yen. We believe this market is going to move lower. Potential support at 116 and 119. Euro dollar, if it's moving higher this week, it's going to be for a short. That important levels are actually below here, 110.80, and the other is 109.60. So these are the level that we have to look at. All right. All right. So Todd seems good with that. So let's have a look at some of the other markets here. All these markets, I mean, it's really there is really a lot going on in the Euro Canadian dollar, as well as the Euro Australian dollar. They're very similar, and the point is, they didn't offer a free, a risk-free entry or a simple entry to take advantage of it. And when it's like that, they just step away. Now, the Euro Australian dollar has resistance above highs here, and this market has tried to, to challenge those highs, but unsuccessfully. Unfortunately, in doing that, did not offer a good entry. So where this market is going, this market has the potential to, believe it or not, it has 142, 143 level, and And this becomes an opportunity only if he retraces before he gets into 153, and then gives us an opportunity to enter short into that level. So very similar situation for the euro Australian dollar, which is a little bit more bullish here, but same situation, same pattern as you can see there. It's like the Canadian is actually becoming stronger on the euro and weaker on the Canadian on the US dollar. We will see if that continues that we were looking for, and so these two markets really do not offer a lot here in this period where there is a general setup and correction of these markets. Okay, so all these markets they are setting up, and somehow I believe the leader here, and it's the leader only because it gives the trend is very clear. The leader is the US dollar Japanese yen here. This guy is leading everything at this stage. And I believe that as it starts moving lower again, the euro dollar, of course, will jump higher, and some of these pairs here could also become stronger, like the euro Canadian and the euro Australian dollar here. All right, so so in reality, there is not really a lot to look at for this week. We have a potential short on the Australian dollar, New Zealand dollar. There's going to be news today and tomorrow, and it's going to be a heavy week for US dollar as well in the last 3 days of the week. Now, this level here could push price into lows here. And there are two areas that have traded. One is a weekly that has a target here below 128, and the other one has traded and confirmed today is the 107.70, helping price into that target. So this would be something that there could be some interest in trading that. However, I'm just waiting for things to set up so that all these markets will start moving as well consistently in the directions of their setups as well. So this market are going to move always in the direction of the setups. Okay, on the previous existing setups. So it's 8 and it's 8:30 almost, and there is a potential commitment here at these levels, and we will see whether this area is capable of reversing some of these markets, which kind of participation we will get from the Tokyo market. That I want to remind that it moves. Tokyo moves around 6% of the overall 6.2 almost trillions every day, which is quite a sensible amount of wealth that are being moved by these markets. All right. So any questions in relation to these markets or other pairs that you want me to review? So we reviewed the SP 500 as well, and we actually shown also the risk off and the perfect correlation or relation with this Japanese yen. And I also mentioned that in that case, when we're going to see this market, US dollar Japanese yen correcting, we're going to see also the SP 500 doing something similarly. So, as you can see today, it's pretty slow. Today is also President Day in the United States, so volume it's much smaller, of course, on stocks as well. And the stock market, I think the stock market, I haven't checked that. And I hope you Hope you can keep seeing me. Here we go. We're still on. Let me see. Okay, give me a yes if you can still see the charts, and you can see me here. Hello, and if you can see me here, give me a yes. As I've got a message here on Google Hangouts, so if you can see my face, give me a yes. Okay, good. So we can just continue then. All right. So let's continue here, and let's continue with the charts. So I've got I got a question there. And pound versus Japanese yen, please. That's Joe. And let's look at the pound first. I also have a question on the $300 US dollar. And my answer there might surprise you a little bit, Jason, but let's look at the pound versus Japanese yen first. So pound versus Japanese yen, we know this market as a target at 154.40. Where do we get this level from? When we do the full analysis on this market, and we start from the weekly as well, we can see that this market has been trading in extension here, and it's moving lower into that 156.34. Now we came very relatively close to that 360 pips, and I believe this market has the potential to continue lower into that level. Okay, and the reason for that is that there is potential participation at 175 here, which is pushing this price lower. Now, at the moment, it's actually following the same pattern of the US dollar Japanese yen, and we will need to see where this market stops. That's what we have two levels there: 166.31, 167.40 or 30 here. So if you're in a long, the first level where you should probably remove this trade is going to be 166.30, and I would deeply recommend that. And then we'll need to see which one of these two levels is going to offer a continuation. Of course, this market could continue higher, but in that case, it will be just another opportunity to sell short this market. Now, as I mentioned also yesterday, I was trying to mention yesterday as well, is that when we put these two markets side by side, this market and not the silver here, we'll talk about this later on. Look at where it opened here. So this is not the market I want to look at, but I want to look at the US dollar Japanese yen. As I mentioned before, the US dollar Japanese yen is going to lead the show here. And obviously, you can clearly realize that all these markets have the same shape here, particularly the markets that are trading against the Japanese yen. So whenever we're going to find the top of this move here, and we will see how this market continues tomorrow, whether it's going to continue higher. That's what I foresee. This market could continue as high as 118.50, not 119, but that's where we're going to see it. I think this market is going to stop at 116.30, and we will need to see what's the corresponding level for for this pound versus Japanese yen. So is this a short? It's not a short yet, Joe. It's going higher to find its level of resistance. I believe when US dollar Japanese yen will have found it, we will see the top for this market as well. And here there is an opportunity for a potential 1,000 pips in the pound versus Japanese yen. But again, I believe the US dollar Japanese yen it's a better opportunity. When we found the top of this market, we are going to actually find also the we're going to find the top of a lot of things, a lot of pairs as well as the stock market as well. So this comparison between the pairs carrying the Japanese yen with the US dollar Japanese yen as well as the SP 500 is very, very interesting here, and for obvious reasons. So I don't have a clear edge in the pound versus Japanese yen as I have on the US dollar Japanese yen at the moment. So I will always prefer that market, and this market is going to find eventually the top as well. If the US dollar Japanese yen retraces before a continuation higher, this market is going to retrace as well, very likely. Jason, do you think the Australian dollar US dollar will test the 200 moving average? Well, this is a very strange question for me because I do not use moving averages, not since a long time now. The moving average have a function or a reason to be in the continuation style, which is one of the trading style that I used in the past. I think the Phipps token is much more powerful in terms of identification of entry levels, risk management, as well as timing. So let's do this exercise together. This is 200-day moving average on the daily here, and I think that measure move is very, very far at the moment. This market is still in a short, okay, and it's still in a sequence of shorts. So I don't see that market actually. I don't see that market actually moving through the 200 moving average that we're going to show in a minute here, because this market is still in a sequence, and actually it actually has traded the sequence short here. So I don't see any reason why this market should actually move into the 200 moving average, which I don't use anyway. And when we look at that, this is a 200 here, and before he can get there, he needs to break the 72.62. Do I see it doing this at the moment? Well, one could say if the euro dollar will go up, right, all the US dollar is going to go down, and potentially this market could continue higher. So it is a possibility. Longs are not in control in this market. Shorts are at the moment. The move higher that you see here, it's driven by smaller time frames, and this 50% 71.80 is being challenged again, and this could get participation on the downside. So will it go to test the 200 moving average? I don't see that until this area of potential resistance here, and participation short is actually one on the upside. And when that happen, and if that happen, this market could actually for sure test that level there, and maybe even move above that level before a continuation higher. So know if this answers your question, Jason, but That was the long answer. The short answer is that until we clear this area of resistance, there's no way this market is going to get there. I don't know why that level is important to you, but it is definitely not important to me. These levels are much more important than that. If the market gets there, yes, I mean, a lot of people are going to observe that, but it's not something that is going to decide the outcome for this market. What decides the outcome of this market is how the algorithms are placed in this high volume market, and you know, around this long term moving average, there can be reactions. But never something that can change the direction of the market in the long term if there are algorithms that are supporting price in the opposite direction. All right, so I hope this answers your question, and you know, I'm not into moving average anymore. I think that there are better ways to gauge the direction of the market. And a lot of people look at these levels and they become self-fulfilling prophecies. However, there are other levels in which there is participation, as you can see here. The 7180 area, it's way more important than that level there. All right. So let's have a look at our gold and silver here, which we keep following because apparently now this market have, I think that's the same one. I think they have, as you can see, they opened with a gap lower here, and gold has opened basically, you know, $30 below, and the silver here has opened 40 cents below, and this market are going to correct inversely with the SP 500 again. So there's a lot of inverse correlation here, and or direct correlation, which is going on as these markets, as the SP 500 continues higher to find the top. This market is going to move lower and find a bottom, and then they're going to reverse as well. All right. So any other questions here? It's a kind of we are in waiting mode here in order to understand what we can do here. There is a short in play in Australian dollar, US dollar here. Well, potentially this could be a short. However, the sequence here, it's not very clean, so it's not something that I'm willing to look into. So I will actually yeah, the point is, you know, it's not clean, it's not clear, it's a secondary test. You know, it's a secondary test of that extension shot that I showed you before when we looked at the Australian dollar here. Right, it's a secondary test of that large extension there. The point is, you know, we have better levels to consider here, and until that move in the US Japanese yen is completed, we will not get the actual directions of this market. So this market is moving laterally, and it could be a short. I agree with Ju Bankai, and there is also a short in Australian dollar, New Zealand dollar here, and you know, we can look at that market a little bit more in detail here to see what's going on in the smaller time frames. That's the strong participation into that level of resistance, and then clearly that level of resistance was rejected, and this market here, the sequence here, this market is has been very aggressive here, and moving at some point, start moving in extensions here into that level, and the confirmation of the short came at this level here. So this was a 07170. The high was 7176. It's a 6 plus 2. It's an 8 pips opportunity here. That's the kind of opportunities you want to get, and this would have worked here on the 1 minute. The point is, I'm not until I see US dollar, Japanese yen correcting. I'm not looking at this opportunity. This was a good opportunity anyway. This could continue lower. So very well spot that, Bankai, and this market would have offered already 171. 71.62 a free risk trade already before coming back, so it's definitely a good opportunity to trade. Of course, talking about here a timing on the 1 minute, which is something that you have to have a supporting tool to do that. That's the reason why I'm in the process of developing the FIBStalker console that allows to do these kind of things, in a highly automated way, and that's the kind of opportunity that you can get there. Some 8 pips of risk is not too bad. So yeah, this was an opportunity for before. I mean, I'm not focusing on these markets this week. I'm only focusing on the major markets, as I mentioned, because I'm preparing also for the New York Traders Expo. And I need some time also to prepare the presentation, as well as prepare the software I'm going to present as well. So this week is going to be a little bit lighter for me, but the opportunity, as you can see, are there. Now, will this opportunity hold? Another reason I don't look at this opportunity as a long term is because we know that more or less the direction of the US dollar as well as the US dollar Japanese yen is somehow decided. We know that this market is eventually going to move higher. Now, if the euro dollar moves higher and the US dollar becomes weaker in comparison to the euro, is likely to become weaker in comparison to other markets as well, Australian dollar, US dollar. So I want to take a trade. I want to have a position that I can bring safely for some time. If in 2-3 days the US dollar, the euro dollar finds the bottom, and this week, say, and then this market starts moving higher again, or it could have difficulties in moving lower because of that. Maybe it's not a good opportunity. But this short here could actually bring price into 170.64 here. So it's a 100 pips potential move lower, but with a lot of upward risk due to the fact that the euro dollar is eventually going to find support. So that's my reasoning for that trade. Okay. So let's do a time check here. We have time for a couple of other questions. If there are no questions, what I'll do, there's Rudo here. Thanks for joining in. Any opinion on US dollar, Swiss franc? And so I'll review this market, and then I will complete. And we have this US dollar, Swiss franc that has been moving lower here, and now it's likewise all basically all the market that are moving higher with the US dollar, Japanese yen. this market is actually correcting as well. Now, this market has also found supported an important level. It's a 50% level here. So that level gave an excuse for shorts to get lost and for short to get lost and take profits as well. It's a very good. If you're long here, Rudo, for some time, I think this is a very good opportunity. Now, the point is how the US dollar is going to behave once the US dollar Japanese yen has found its level. So there are a number of levels that you have to watch very carefully. The closer level where I would remove the shorts for security is going to be very, very close here, 99.07. That would be the first level I would consider. Of course, you can try to bring this higher, but it seems to me that this market is actually, is actually going to be influenced by the overall direction of the US dollar. There is a long as well in place. And this could bring this market a little bit higher. The point is, eventually we're going to get a reaction lower in this market. So you want to take out your position, and then if this market has to continue higher, is going to offer anyway an opportunity to enter. So my suggestion here would be to find targets at 0.99 or 99.07 or 99.93. The market might not get there, so I would actually remove that level there. Okay, and I would consider taking profits at 99.07. All right, I hope that helps. So I'm going to start a recap of this session right now. And we actually have looked at the euro dollar here, and we mentioned the two levels you're going to watch in the coming days, 110.76 as well as 109.60. These are the two levels that we are interested in timing and looking for opportunities for a continuation long. It is possible. I mean, any of these two levels is possible, so making any assumptions on them is a little bit foolish, because you would try to impose our will on something that we don't know how it's going to behave. US dollar Japanese yen is the great teller. It's the storyteller of this junction in the market, and I believe that we have a very high probability of retesting 170 here in the coming weeks and potentially months. This market has to find its relative high here, and you can I believe the closer level is going to be 116.40 here, 30, and this market could just continue higher into it by actually consuming all the energy at long participation. That at that point would be a much safer short, and if that was the case, we would have in our hands an incredible opportunity here for 1600 pips. Not that these opportunities are uncommon, but they don't come with that frequency that we would like them to be. So if the market gets into the level, I'll be very interested in trading short. Of course, there is another level as well. That's the 118.50 or 40. And if the market gets there, it's in a better gift. So these are levels where you want to try to risk something in order to take a position. That's the price we pay to take a position. And that's, again, it's 116.30 and 118.40. Are the two levels we're going to watch for shorts continuation. Once that happen, the euro dollar will also follow suit there. Then we compared the SP 500 with the US dollar Japanese yen, and the reason why we did that is that if it's through the risk is off, and the US dollar Japanese yen has to retest 110, then whenever this market, the US Japanese yen, will find the top, the SP 500 will potentially find the relative high of this cycle Of course, there's an absolute high that has been printed already, and that would be on the futures would be 221.09, and we're going to see whether this market is going to offer a level that we could actually start taking some shorts in the SP 500. Of course, that would be through ETFs, leveraged or not, to try to carry, to actually trade this market on the short side of things. And next, we have been asked to look at the pound versus Japanese yen, and we reviewed that market as well. I mentioned that in that market we don't have the, we don't have the edge we might have in other markets as well, and particularly I compare that to US dollar Japanese yen. This market has the potential to move into 156.40. It went to 160 here. It's showing the same pattern that the US dollar Japanese yen is showing, and as soon as that market will reach the highs, this market will reach the highs as well, and it's going to be becoming a short. However, if I had to choose between the pound and Japanese yen, I will use the Japanese yen, of course. We then quickly touched on the Australian dollar US dollar, and in the meantime gave a 1 minute entry with 8 pip risk here in this market. I have not foreseen that move because I was not interested in trading that move. If US dollar, Euro dollar is going to move higher, this market is potentially going to move higher, so you want to trade things that actually go in the direction of the path of least resistance. I was also asked if the 200 moving average is going to be touched here, and that's going to happen only if this area of potential resistance, as you can see, this is trading as a resistance now. Again, it's actually dissolved, meaning that the bears disappear from this area. And only though if price gets above 172.62, we are going to possibly see this market touching what is now 72.73. This is going to go down as the market develops. And finally, we reviewed the US dollar Swiss franc, and particularly this market is very, very close to a potential target in 0.99 for longs, and that could be the start of a continuation lower after this big drop. Obviously, if the US dollar Japanese yen is to move lower, this market is going to move lower as well. All right, so this is it. This is it for the show here. I'm Philip Stalker, Giuseppe Basile, and I'll be here commenting on these markets every day from 8 EST to 9 EST PM time here in North America, Central Time. And this week is a little bit slow here because actually, I'm seeing the market a little bit slow due to holidays as well as my preparation. But the reality is that until the US dollar Japanese yen corrects into position and we start actually looking at this market reversing, until we see that, we won't see a lot of movements here. All right, so this is it for today. Thanks a lot for joining in. Rigul, Karim, Peter, Joe, Jason, Pankai, Rudo, Jax, Jake, Peter, Rigul, Lee, Kerry, Desi, Joe, Adinda, Carlos, Vika, Roland, Beckton. Thanks a lot. If you like the show, please tweet about it. Tell your friends. Let's make this show grow in terms of attendees as well as questions we can get and markets we can analyze. And I will see my students later at 2 a.m. When we do the actual trading of the Euro session, and for all the others, I'll be very happy to see you again tomorrow at 8 p.m. If you like the show, let people know. Actually, you can link to tweet the link if you can, and if it doesn't bother you, and so we can keep and let this show grow and have more participation as well as questions, and so we can actually all benefit from this. All right, thanks a lot for joining and being here, and see you tomorrow at 8 p.m. EST, and have a great day, evening, or afternoon, and happy President Day and happy Family Day in Canada, and I'll see you tomorrow. All right, so bye now, and I'll leave you with a few charts here. Have a good day. Bye bye now.